Good morning and welcome to the Market Open with Dr. Barton Jr. this morning here with you, as is our tradition on Tuesdays. It is September 1st, 2020, and what a day, what a couple of days we've had in some very specific pockets and in the markets overall. We're going to get to all of that and we'll dig into what's going on in these markets. And we're glad to have so many people on. Let me check in and see who's coming in so far. We've got all kinds of folks. Welcome, Flo and Don Porter. It's great to have you. Angela, we got Nirmala. It's great to have you on. All the folks we've got, I'm sure, Selena, Bruce, Peter. Good to have you on as always. From Indiana, Clarence, lots of people out there. So Pat, great to have everybody on. I'm sure people will be coming in much more already, streaming in. Elvis, always. Rick, good to have you. We got lots to talk about. Let's pull up a quick agenda and see what's going on. To do that, I'll pop down to this corner for right now so that I can get out of your way. How about something like that? And then we will pull up what we want to talk about today. And that looks something like this. We'll talk, as always, about the state of the markets. And it's the ever-ready bunny market. This market just keeps going and going. And it is amazing. We'll talk about some potential profit targets that we talked about in our Dark Edge trading room on our Friday bonus session last week. And we had one of our traditional morning attendees here, Market Live attendees, and I'm looking to see if Serge is here. Sergio is in the house. I don't see him right now, but I'm sure he'll be coming in. He rarely misses one. But we talked about how do you find the next potential target when you are at all-time highs. There's no previous market activity to guide you. So we'll talk a little bit about that. But let's, oh, look, I've even got Cloudera covered up there. That's okay. We'll talk about that in a minute. The indexes are up pre-market again. Thanks to, well, let's take some picks. Let's take some choices. What do you think? What is driving this thing right now? Do you think it is more stock split mania? Is it Tesla? Is it Tesla and Apple that is driving this market and Tesla up again? Is it Zoom euphoria? Zoom was up 35% just a couple of minutes ago. It was up 27% just a half an hour ago, and it keeps going. We'll take a look at what's going on in the world of Zoom. It's been one of the stocks I've been telling you about for months. We've been doing this coronavirus special coverage here at Money Morning since way back in March, and we continue to hammer on different themes. The work from home, stay at home theme, and what Zoom has done is incredible. 340% year over year revenue gains. Wow. Okay, or is it just that there's no negative news? And if that's the case, that certainly ties back in with what is still the narrative. It is still definitely the narrative that we have the market forces. We always talk about them. What's trying to push the market down has been COVID-19 and the new Cold War with China. So everything there, all the different fronts, not just trade, but geopolitical, everything that's going on there with trading secrets, with what's going on with South China Sea, Hong Kong, Taiwan, all of those issues of confrontation are the things that are pushing the market down. What's pushing us up? Yeah, it's the money. It's always the money. It's the Fed stimulus that we'll call monetary stimulus. It's monetary stimulus. It's not just the Fed, but central banks all over the globe. And it's fiscal stimulus. We'll say fisc right there. Fiscal stimulus. Governments giving people direct money. Extended unemployment benefits. Payroll protection plans where you get forgivable loans, et cetera, et cetera. All of that is money coming into the market, and it is winning. It is winning. There is zero doubt that the money, the fiscal stimulus, is that which is winning. So that is what we are, that's what we have going on there. So I'm going to, let's close that out right there. I see somebody talking about not hearing well. Looks like my volumes are showing up pretty good, really well on my end. So I would be, maybe you can check on volume controls. A refresh of the page often helps. All right, so what else do we have going on there? We'll take a quick look at COVID. It is continuing to show trends in the right direction. Really good for the economy, really good for the health of the country. And I believe around the globe, we are getting some control in lots of different areas. We'll look at the U.S. numbers real quickly in specific. And yeah, we talked about the Dow. We talked about the Dow reshuffle, which happened just Monday. So that big change with Exxon, Pfizer, and who else was there? Raytheon out with Salesforce coming in along with Amgen and Honeywell. So that is big happenings. Now remember, we have an S&P reshuffling, potential reshuffling, but we know there's been at least a few companies that have merged or changed symbols. So the S&P will be updating on the 21st of September. So we'll be waiting for that. And everyone, of course, waiting with bated breath. More good news for Tesla, as they're almost a lock to be added to the S&P 500. So we'll talk about earnings. We'll talk about the earnings from the old school and from the new school. We'll get to those in a little while. And then we'll take some time before we're done to be able to look at your stocks, the things that you're interested in. We'll pull some of those up. So with all of that said, glad to have you here on a Tuesday Market Open live stream here on Money Morning. Remember that tomorrow, as always, CJ will be back with you, but Tuesdays I will be here for the foreseeable future to share this time on the Money Morning live streams. Okay, let's go look at the markets and see what's going on. Talk about some of these things that are hitting here. The market, if you look at this, I'm going to blow this way up. The market had the temerity to close lower yesterday. What's up with that? The markets are supposed to be a public good. They're supposed to just go up all the time. Well, okay, not really, but that's the way it seemed lately. And with this strong move up, look at this. We finally got a little down day. We had 1, 2, 3, 4, 5, 6 straight up days. Then we got a little bit of a down day. This morning pre-market, let's take a look at the pre-market numbers. To do that, we'll look at the ETF, up 0.4%, almost 0.5% on the SPY. So we could just go ahead and take a quick look at the at a 30-minute chart, so you can see this shows the overnight trading if you're not familiar with what we're looking at here. So we've got a bump up here. This is where we closed at, right? This bar would be as a matter of fact, the S&P was traveling along. We might have closed right around unchanged or a little bit above. And then I don't know if you saw it, but in the last 2 minutes, there was a massive sell-off, just some quick profit taking at the end of the day on that last bar. So that's where we closed yesterday. And then we pattered around, didn't do much in the evening trading. Opened up again, stronger up. And let's look at some of the other indexes and then some of the other things that are strongly up. Let's look at the other indexes. So remember that we had the S&P 500 at about about a third, up about 1/3% right now. Whoops, I want to keep that up there. Let's keep that nice circle, because that should, we'll be able to see those when we dial through. We'll look at the newly adjusted Dow, which is only up 0.6%. You know, the Apple's weighting dropped by 75%, by 1/4 is their new weighting. And I believe the Dow is a dinosaur. It has been a dinosaur for a long time, but it is losing relevancy by the minute. And that is why, and this is one of the reasons why. You see where it is today. Let's look at the small caps. The Russell small caps only up 0.1%. And let's look at the tech-heavy NASDAQ. What do you think that's going to be? Yep, up big, up 1%. So up 3x the S&P this morning. And here are some of the reasons why. Apple up strong again. And remember, the NASDAQ and the S&P market cap weighted indexes, so they don't go by the price of the stock. Again, a very outdated way to do the index. I would imagine at some point in time that in the not too distant future that the Dow will be changing their way that they value that index. It just is not working, and the trading volume, it's about less than about a 1/20th the trading volume in the DIA as the SPY. So that's pretty interesting. So we look at Apple. Apple up 2%. Tesla was up 7% earlier, 7 or 8%. It has dropped down and now is flat. Interesting. When I was putting the notes together before 8, it was up about 5%. It was up about 8% when it opened. Now just flat. Oh, after a 13% up day yesterday, up $51 billion in market cap just in one day. Yesterday, Elon Musk became the third, he passed Mark Zuckerberg to become the third richest guy on the planet based on his Tesla stock holdings. So it's a crazy, crazy world that we lived in. But let's look at the big story overnight, because that was yesterday's news. Stock splits were yesterday's news. But after the market yesterday, this little company called Zoom reported earnings, and here's what they did. They skyrocketed. They were up about 350% year over year. That's really close to the number. I think it's 343 up year over year. Their revenues, they have, remember, they already did an explosion with their last earnings report. And here they were up in after hours trading. And then people said, well, that's not enough. They should be up more. And now up 38%. They've been up 40%. 40%. They're up $120 right now, $128 over on a stock that was trading right around just above 300, that opened yesterday at 300. They're up 120. They were up yesterday already, and now versus yesterday's open, up $160 on the 300, up over 50% in 2 days. That's just wow. And so should you jump on the Zoom train right here? You got to believe they're a bit stretched, not a bit stretched, a lot stretched right here. I can't believe that there's too much more upside not priced into Zoom right now. Zoom is killing it. They are doing great things. A Zoom call, I'll Zoom you, has become a verb. That's always a good thing for a company. You know, in the positive context like that. I guess there are some cases where it's not. But what's going on there is just stunning. So let me get back over to our, there we go. So we're glad, so yeah, lots of other people. Is there an after earnings play for Zoom? I don't have the data. The data is not long enough for Zoom to say that actually there is data, but it's not much more than a coin flip. If you look, sometimes in our Dark Edge project, we look at earnings plays for Google, Apple. I've even given you a couple here in the Monday morning live stream. No real after hours play on this one. I mean, if from a trading perspective, this thing's stretched. I mean, this thing is not just stretched, para-freaking-bolic. So I think the easy play is for a short or some puts here, but depends. You know, we've still got half an hour before the market opens, so I got to believe it's going to give back some of this at some point today. But that's just, you know, because this is crazy. This valuation is crazy. But hey, look at Tesla. Look what's going on there and the valuations there. There were all kinds of funny memes on the internet yesterday about when will Tesla hit if they keep going at the pace they've gone over the past month, up 80% in 1 month since they announced the split. They keep going, extrapolating that, they'll be a $3 trillion company by Halloween. So all kinds of funny memes about that. But they're on fire, and that certainly we can say that is the case. So let's see what else we need to talk about today. Now that we've gotten through those few things, let's talk real quickly about just a couple of the things that we need to look at. One of them is the curves, the the virus curves. We'll take just a quick look here on the New York Times site because I like their 7-day moving average that they have here. But you can see that we've thank the good Lord, have been dropping down in cases, a little flat in the last week or so, but that's a good. We're not flat up at these levels. We're flat down here, and we'll see if we can continue to get reduced numbers. Yesterday's numbers have come out, and you can see here that this Monday is lower. Here is the Monday, this day after the weekend valley. So we always get the weekend valleys. Remember that, data reporting valley. Just don't get everybody doesn't report over the weekend, so the numbers are lower, and we get those little valleys. Even while it's moving up, you still get the lowest numbers on the weekends. But again, down to about 34,000 new cases on the New York Times numbers. I think the Johns Hopkins numbers are 1,000 or so less than that. But that's good. That's good news. And also this curve. Now, this curve is not, as you can tell, this curve is not necessarily flattening. It still has a little negative slope to it on the mortality rate, the number of new deaths that are ascribed to the coronavirus per day. So that is a good thing. And I think that when people take a quick glance at that, when traders and investors take a quick glance at at these two charts, they're going, okay, I can set that aside. That's not something that is a current concern for pushing the markets in the wrong direction, for having to, try to sequester more people, to close down businesses, to stop or slow down reopening. So that is something that people look at and just say, yep, stimulus dollars doing this, COVID not doing this very much right now. Okay, so we've got all of those things out there. Let's talk about a few different earnings that are coming up. We'll talk about the old school and new school. I put these up before, but we didn't talk about them when they were up. So let me show you these stocks so we can take a look, and then we'll take a look at some charts and what we're seeing here. So we've got old school. We got a couple of old school earnings out this week. We got a bunch, but these are just the ones that pop out. We have Macy's coming tomorrow morning, along with Campbell's Soup Thursday morning. The old school companies, then the new school companies. We have Cloudera. If you don't know Cloudera, they are a big data processing analytical company. Obviously, Cloudera based in the cloud, and CRWD is CrowdStrike is a cloud-based cybersecurity and general overall data security company, and they report Wednesday. Both of those, Cloudera and CrowdStrike, are smaller companies, but they have a pretty big bite. They have people watch them because they're very indicative of what's going on in those new, especially in that analytics space, cybersecurity analytics in one case, and then big data inference engines in the other, in Cloudera's case. We also have DocuSign, another one of the stay-at-home, work-from-home sweethearts from the past few months. And we'll take a look. Let's take a quick look at all of those charts and talk real quickly about what we might expect to see. And I am going to, so let's get rid of that. We can pull this away. There we go. And I'm going to make sure that I can still see you folks and what you are talking about. Okay, so let us look now. Let's go to a daily chart and let's take a look at what's happening with some of these big names. Old school, Macy's. Well, won't surprise you what Macy's has been doing. Let's go back further. You can see if we go back to early in the year, they were up. They had scratched and clawed back up. They had scratched and clawed back up to 18 from being down around 15, and then fell off the retail cliff with a lot of the mall-based big stores, and they're now down trading flat in the last few months. Don't see too many promising things coming out of Macy's, although they could surprise us. You know what's been happening? We've had some retail surprises, and retail has been one of the strongest overall sectors, largely because of those retail haves. Amazons, the Walmarts, the Targets, who have been doing such a great job, as well as some of those, some of the retail, some of the discounters. Dollar General has we'll take a look. Dollar General's had a great looking chart. So you see what Target has been doing after their super earnings. Walmart is competing really well with Amazon. Now they've thrown their name in the hat for TikTok. That's why we got this big outsized bar here that you see 3 days ago on the near the hard right edge of the chart. So all of those, look at, let's look at, this is XRT. This is the retail ETF. Now, let's see, has retail in general, are we having much more retail sales now than we had before the effects of the virus hit? Here's before the effects of the virus hit, right? And here's where XRT is. I think what we really are seeing here, what this differential is an overweighting of the bigger cap stocks of Amazon's, Walmart's, Targets driving this XRT, the haves overshadowing all of the stores that are struggling. You know, pick your favorite mall-based store and they're going to be in the struggling list. You're going to get L Brands, Abercrombie Fitch, whoever you want to throw in there, Gap, all of those stores are struggling, and they are not the reason that the XRT is up at the top corner of the chart. So that there we have Macy's. Who else we have? Campbell's Soup. Good old Campbell's Soup. Now look at the Campbell. This is sort of what you would expect. Let's call Campbell's Soup. Yeah, there's a packaged good company as kind of their subsector, but they're in the larger consumer staples group. That's the group that doesn't suffer too much in down markets and doesn't grow quite as fast in up markets. It's sort of a defensive sector. So what would you expect from a consumer staples company? Well, coming along, they weren't setting it on fire coming into February, coming into the pre-COVID times. But when we had the drop in COVID times, first of all, they said, oh, people are going to be buying more soup. They're going to be hoarding soup. So they got a spike. Then they fell down, but not by a lot. You know, $8 on 54. That's one of the smaller drops you've seen in any stock. And then they've sort of equilibrated, but have been pulling up. So people are expecting some good news out of Campbell. So we'll see what happens. But then let's take a quick look at those new school companies now. So let's take a look at CLDR, Cloudera coming up. They're near the top of the page. Again, one of those, I think people don't understand their business really well is one thing that's going on here. And of course, they've you know, their analytics company is going to be helping a lot of people who are looking to understand the big, huge data sets that they're getting from all the data online. And so, you know, I think they come and go in terms of people really concentrating on them. And they're a pretty small company. They make much less than $1 billion a year. But let's look at this. Here is a potential for those of you who do some charting. A potential, we'll watch for a cup and handle formation on this thing. Get a little pullback on earnings here, a sell the news. You can see they've run up into their coming earnings date. Get a little pullback. You could get a cup and handle here for a nice setup for a long trade in Cloudera. CrowdStrike, one of our other names that we talked about, they've been pushing up. In general, cyber, I believe, is one of those strong places to be. Although one of the issues with cybersecurity in general is it is a very fractured industry. There are not some big players. There are no Amazons or Walmarts of the cybersecurity world, but a lot of the cybersecurity players are doing really well. And unlike a lot of them, like one of my favorites, Fortinet, I've talked about before, who does hardware, firmware, and software, CrowdStrike is a complete software as a service, a complete cloud-based solution. So interesting company going forward, one to keep our eyes on. And then, of course, there's DocuSign, who have been just strong. Look at that chart right now, back up to the top of the page. I think they're going to need some Zoom-like numbers to really have a big earnings report result, a big earnings report stock result. You know, Zoom just exceeded all expectations on every metric, and so they're up 30, 35, 38% right now. DocuSign without those kinds of, with great numbers, not some amazing numbers, they might just get a little sell the news moment. So we'll watch for that. They could come out with some really great numbers though, and I'm kind of expecting that they will. I'm kind of expecting they'll be somewhere between great and spectacular, and we'll see if they're going to get the big Zoom-like bump. No, they won't get a bump like Zoom. They'll get a bump. They could get a better bump though. But it could be a time where you can buy some DocuSign on a pullback, because I think this is another company you want to own. We're going to this long term. They're top of mind. They're one of those companies like Teladoc that have, that, you know, when you think of telemedicine, you think of Teladoc. Who else is out there that's doing that, especially as kind of a single purpose sort of company? And DocuSign, I've signed a whole bunch of DocuSign documents lately, and I've used them in times past, or I don't have documents that I'm sending out for signing, but have signed a bunch in years past. But boy, it's 10x this year than any other time that I've had. So I think this company is going to continue to pound higher. Okay, we've got some time. We won't end right at 9:15, as you always know. Never end right at 9:15. But I will take some of your stocks. We'll take a look and see if we can dig into some, maybe even look at some dark pool data together and see what's happening with some of the stocks that you're interested in. And so with that said, if you put them up earlier, I will not have seen them. Let's see what you're looking at. So Sergio wants to look at Peloton. We'll hit Google as well for Naveed. All right. Yeah, Gary, Hack has been strong. Let's take just a quick look. We won't do an analysis, but Hack has been strong. You know, so much more emphasis on, you know, we have now companies with people that are going to be longer term work at home or working at home a lot more. I believe the security of that data for companies is going to be more and more important. That's going to bode well, I believe, long term for the cybersecurity companies. Google, I believe Google is going to the 1500s anytime soon. I'm not feeling that right now. Naveed. As a matter of fact, Google, I told you a few weeks ago, was a catch-up candidate, and it's done that. And I think it's still lagging some of the other of the big five. So I think the one problem with Google, I think they are one of the ones that have some antitrust headwinds. They've already taken some little hits in Europe, but here in the U.S. With their overwhelming market share in search, I believe that they do have a little bit of exposure there long term, but they're still growing double digits, still growing their revenue double digits, so they're still doing a lot of good things. Google is still paying a lot. Their expenses are going up as they're growing those revenues, though, and that's what analysts are looking at, continuing to watch how much they're having to pay per click to get folks to come and look in their search and to do search and then to go click through to advertisers. So that's a very interesting metric that we'll continue to watch. But no, coming back down, no technical reason. I mean, yeah, that's right around a support level. I'll give you that as A plus on that as a support level versus 1450. I believe the better support level is 1500. However, I just don't see the driver to push people out of these big five right now. There's just too much money to be placed in the markets, and who's growing double digits? It's these companies. So let's see. We had another one. Let's see who. Sergio, I'm going back. We got a bunch out there. Okay, Peloton. Yeah, so there's a stay-at-homer. They have their subscription model is great. Peloton, I think, is going to continue to do this because I think one of the big issues that Peloton has is that Peloton, you can see how they've grown. You know, just look throughout. Here's the lows. Here are the March lows. How they've grown in bigger fits and starts than most. There was a good one, but you can see they really loop as they go up because the Peloton story, the subscription story is great. So they're not just selling a bike, but they're selling that that fairly pricey subscription, and I think that's the issue. I don't think they have a way to push that down, a very good way to push that down to a lower economic strata to pick up some of the less well-heeled, let's say, consumers. So I think that's one of the things that people are looking at for the long term, and a lot of competition coming in. Apple now looking to bring some competition into the exercise arena. So we'll keep an eye on that. But yeah, they earnings next week. Yeah, okay. What are we going to see? I believe this is going to be another chance. If you want to buy more, to buy it on a loop, I believe they're a good candidate for sell the news. We've got a lot of positive earnings expectations built in with the stock up at these levels. So yeah, I think that could be a sell the news chance to pick up more if you like the Peloton story. Let's see. I'm not very familiar with NPTN out there, but I'm pretty familiar with that chart, and it's pretty ugly. I don't know the fundamentals to speak on what Neo Photonics is doing. So, but the chart, they've broken through the 200, and this is a classic head and shoulders. So we got a shoulder over here, we've got a head up here, we've got a shoulder over here. We broke the neckline, and boom, down it goes. So a measured move, where should this thing go? About, let's say, about 10.5 to the neckline, 8. So 8, 6, this is 550 target on this. So you got a 550 target on this breakdown on Neo Photonics. Okay, let's see here. We'll hit as many as we can here. We'll go with we talked about NIO recently, and what are you seeing here? You know, this is just a classic. This is a classic top on a potential classic top. I mean, this is looking like a blow off, but we've seen a lot of other companies that have done similar things. You know, when we looked at Nikola, we've looked at a lot of different things, but you know, you get the pop, you get the consolidation, and now we've gotten a new pop and a pullback. Look, somebody have to remind me. I think electric cars, aren't they the electric car company in China? I can't remember. Somebody can remind me on that. But this is so that kind of story. You know, you love that kind of story. But that's this chart is it's a breakout, and that's good. I think if you can maintain above the 16, that's the 16. Let's get all that other detritus off there. That's your price target after this breakout, after the breakout of the consolidation pennant here. If you can stay above that, I think it's good news. Below that, I think 11 comes back into play if you break down here. So that's something to keep an eye on. It's only trading 145 million shares a day. Wow. So yeah, we know that the Robin Hooders are loving this one. So let's look at a couple of others here. We had some others trying to get into. Okay, so we got Fastly, we got Pepsi, Fastly. We'll hit a couple of these. All right, so we've got. I'm getting behind. You guys are throwing them out so quickly. Love that. Love that. So Pepsi is breaking out. This is one that we're in. We have a position in Dark Edge project, and it is breaking out right here. You can see that strong long-term resistance level that came up and tried to get through here, couldn't. Here, 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 here. Worked a couple of days and now moved to there. So I think Pepsi is a breakout candidate, but it's a slow mover. Pepsi's a slow mover. It's gonna grind higher over the next weeks, I believe. But doing work on the nice breakout there. I saw. Let's see. We got Dow and Disney. Let's do one or the other. Let's do Dow, first one up. And again, it is right at a serious resistance level. So let's look at a horizontal line, put it right there. It is trying to break through. You can see it hasn't been able to close above that level. And if we look back at this chart, you can see this is not just a recent level. You can see this is not just a recent level that this thing has hit. It's banging up against there. And if we look over here, it hasn't gotten, we've had a couple of tails go above there, but no closes above there. So Dow is going to need to push through there, If it does, that's good news. I think the industrials complex, and you can argue where Dow belongs, especially after the DuPont come together, get apart. You can see their charts look a little similar. Here's one of the other split-offs from DuPont. There's Chemours. So you can see, but a lot of these charts, we traded this one. We traded Albemarle for a nice 100% gainer on the second profit target in Dark Edge project. I believe these kinds of industrial stocks, people that make real stuff, that make tangible stuff, are going to do well in the new inflationary normal. Powell has signaled that they're going to let inflation go higher than 2% with all this money coming into the market, coming into play. And if we can get COVID beaten down here in the next few months, get a vaccine between here, sometime in the winter, spring, I believe that we're going to get some inflationary action. And you want to have some money to be able to put to work in these industrial companies. So let's look a few more. Some people talk about CWH. We'll just pull it up, and it's pulled back here. Yeah, Camping World. And this is, again, you could see this. And Edwards and McGee would yell at me for calling this one a double, a head and shoulders, but it's sort of an abbreviated head and shoulders. They want more space in between the shoulders and head than this, but it's pretty close. And then you say if that's the neckline, right? Let's say it's probably a little bit of a descending neckline. It's broken down below that. So I think some yellow to reddish flags on Camping World there. So let's see what else we've got there. I would yell out your names, but I'm not supposed to do that. So we'll just look at the stocks. And yeah, Synaptics is in a little bit of a holding pattern. You can see it gaps. It's got a bunch of gaps in here due to the nature of where they're located. But if you look at what's happening, this is not an unconstructive pattern yet. I think the key feature that I see right here is we've got a little short-term trend line holding right about in here, something like, let's see, how can we draw that better? Something like that, that's going to be holding right there. That's something to keep an eye on, but of course you can draw the other one going the other way. So we're getting a little volatility consolidation here. We'll leave this up. Remind me next week, and we'll revisit this one because it's going to break out. Something's got to give in that little consolidation pattern. So we'll keep watching those. Okay. Yeah, I tell you what, I am not a fan of value picking Oxy here. Occidental. We had a short trade that we cleaned up in Dark Edge project, and you just want to look at all the things. This thing's crossing all the wrong. It's ticking all the wrong bars for a reversal. Let's pull. There's this 50. It's broken below the 50. It's well below the 200. If we wanted to put some trend line action on this, you can see this thing's just probably something like that. Yep, we could something sort of like that. So we got a touch up here, a touch up here. There we go. So, you know, it's not even strong enough to get back up to that old trend line. So then you draw a new one. So we can get nested trend lines here, and you come off of here down through there. So I think, I think Occidental. Now it could be basing here, but I don't see any impetus for it to just explode back the other way. So so let's take a look. Yeah, XLE, the broader energy, it's out of favor, and I think will stay there. It's got some support right here. Clearly, you've got some support right here at 35, going back into here. So that's pretty clearly a good support level, support and resistance level. But in this case, support level. There's not much going on in the energy world. We're going to have to see some really good GDP numbers picking up globally, not just U.S., not just China, but Europe's going to have to get into play as well to see some good picking up GDP numbers. I think for XLE to do any good. So let's see if we can hit a few more of these. It's about time. We'll look at DHI. Which is, you know, the home builders. I think buying these pullbacks is a really good idea on the home builders. I believe we're seeing a suburbanization trend again. People leaving the big cities. Not a mass exodus, but in big enough numbers that some people like DHI, Toll has been doing well. Pulte. You know, you see these, all of them at or near the top of the page after they got really beaten down. I mean, you look at Pulte, they went from 46 down to 17. You know, so that's really a whooping, and they've really come back, and I think they're really strong. I think that pullback, even though for those last few days, interest rates are going to stay low forever, essentially forever, for a long, long time. So that's going to be all good for home builders. So that's just good stuff going on there. Yeah, not much to say about Nikola. I mean, you know, I believe the hype, you know, you got the hype, you got the other side of the hype. Could you get another bounce? Yeah, you could get another bounce if you want to play for this for another, you know, another 50% bounce just on crazy news, the next crazy news for the truck manufacturer. But right now, they are more hope than substance, I believe, here in this company. And yeah, it'll just keep, it's going to keep bouncing around like this. So there you go. Yeah, and then Zachary down below that comment is saying that you've got all of these big electric car companies. Yeah, it's the wave of the future. It's where we're going. And, you know, and there's some other things other than carbon emissions, because if we balance all those out, there's some complicating equations there. But there are some mechanical things about the electric cars that are pretty darn interesting in terms of not breaking down as much, efficiency. Of course, we got the whole big battery thing to work on, and as we do incrementally better there, that's just going to be getting stronger and stronger. Yeah, okay, thank you. A lot of people weighing in there on NIO. Got a lot of other comments. Let's see. We'll talk about somebody's looking at Lockheed. I like Lockheed. I think Lockheed in general is due for some more upside, and I think buying it on these little pullbacks to the 200 in that 250 zone right there in the middle, that's going to be a good place to pick up some extra Lockheed. So we're running out of time, folks. The markets want to open here in just less than a minute. So we've taken a lot of time looking at a lot of your stuff. Thanks everybody for being on today for the market open. CJ will be back with you with his always and ever insightful comments tomorrow, and we'll look forward to seeing you right back here, same bat time, same bat channel, next Tuesday here for the Market Open live stream on Monday morning. Everybody, have a great rest of your week. We'll see all you dark edge traders at 10:35, and we'll look forward to seeing everyone else next Tuesday. God bless you. Have a great one.